It's Mark Yagi. Welcome to another Market Pulse. Today is the last day of February already. Crazy. And it's even crazier in the market. It's a red market, which means you're probably feeling it if you're in the market. Remember, I told you last week on Friday that I think we're going, well, yellow. I was saying then, yellow always leads to red unless it goes back to green, but yellow is a transition period between green and red. And I felt like we were doing that. Remember last week I said, I was feeling a little funky about the market, and sure enough, the market has turned red. And if you're in any of the stocks that a lot of people trade, you're feeling it, right? Most stocks are going down. 70% of a stock's direction comes from the direction of the market. We're in a red market, so therefore, 70% of the stocks that most of us are in are red. So let's take a quick look at what's going on in the situation room here. All right, so we've got four red lights. So everything is kind of turned to the downside. The market certainly is bouncing up a little bit today. This is normal. We've had a lot of down here. Like 4 out of the last 7 days have been down. And so we're seeing that. So that's the way it's going to go. It doesn't end like right tomorrow, right? We're going to get some bounces. We might get some more moves to the down. We might get some bounces, but eventually the selling stops and we start to bottom. That's the way it happens almost all the time. So that's the way we've got to play it. Here's why it's happening. Take a look at the NASDAQ. This is 6 days, 7 days in a row of lower lows, hitting the 50-day moving average and bouncing up today. So that's healthy. If we get some good volume on it, boy, that'll stick. But look, there's all these people that have been burned on the way down. And as soon as it goes back up a little bit, they don't want to get burned again. So they'll start selling. It takes a while to get rid of those people. And so we'll see if we continue to get downside. I think we probably are in store for some more, at least on the tech stocks. S&P 500 is below the 50, but above the 200. So that's a little better, not quite as drastic, but I suspect that if the NASDAQ is leading it all the way down, we might be, heading down to that 200-day moving average on the S&P 500. The Dow Jones is a little healthier now. Remember, it was kind of breaking new highs, but not strongly. Now it's come down to the 50-day moving average. It's living below here, which I don't like too much, but it is not down, even close to the 200-day moving average. So that's good. So you're seeing a little bit of a mixed picture, but we are red. The Dow Jones Industrial is above the New York Stock Exchange is above the 50. That's really healthy. Let's hope this one pulls everything else up. I don't think that's going to happen, but maybe it will. I don't know. I just have to play it like I see it. Right now, the market is showing me a probability for red, for selling, for lots of sellers and fewer buyers. But that could change next week. Right now, it's red. And you can see the volatility, the panic index is up. People are panicking a little more. There's a lot more selling going on. That's being showing itself in the market. Look at this computer index. A lot of the stocks that people are in, Nvidia, Microsoft, Tesla, even Palantir. A lot of these tech stocks are in the computer index, and you can see the computer indexes. That's a pretty severe drop from 18,000 to under 17,000 in just a week. There's something going on in the computer index, and that's taking everything down right now. Who knows? Something brewing, maybe? I don't know. We'll see. Apple looks like a pretty healthy chart so far right now to me. It's just kind of waffling around the 50-day moving average. I don't think there's anything to worry about with Apple right now. If we had some high volume bars in here, I'd be more worried. Not so much. Tesla is gone. Can you believe it? It's gone from election day, all the way around back to where it started, right around election day. And so that's a round trip. That's like one of the biggest sins you can have is to let a stock go all the way up and watch it go all the way down. Hey, look, I've let it happen. I just try not to let it happen anymore. Hopefully you haven't gotten that happening to you, but you're seeing the stock kind of moving down, but now bouncing off the 200-day moving average. So hopefully with some volume, with some help, it'll stop there and maybe just, kind of head up to 300 before it goes even higher. MicroStrategy, same looking chart. Look at those two charts. They look almost the same, right? And so MicroStrategy is bouncing off the 200-day moving average as well. Nice, healthy bounce, hopefully with some volume, and that'll be even healthier. Amazon I'm not worried about Amazon. It probably wants to go down and tag that 200-day moving average. Last time it did it, it gapped below it and came back up, and then it bounced along it for a little while, and then it hasn't seen it in a while. So it's probably due for a test of the 200-day moving average. Let's hope it gets out of this little under the 50-day moving average after it does that, because I don't like Amazon hanging around down here. But this chart doesn't look too bad to me. This one doesn't look great. It's below the 50, below the 200, and this is Nvidia, and it's kind of in a range. And, maybe it's just coiling the spring to shoot higher, but it had incredible numbers and the stock has been punished since those numbers. So that's why we don't take real big chances in our program on the downside going into numbers. Just those are the days you can avoid. And here we are going to the downside. One more I'll talk about, and I think I did a little update video on this one earlier today, but a couple of weeks ago, I put out a video, maybe a week and a half ago, and I said, listen, I know the stock's up here at 125, but there's a gap here that wants to get filled. And I know a lot of you are like, what are you talking about, this gap getting filled thing all the time? Well, there's something to it, guys. Okay. There's a gap here that, on earnings or whatever it was on news, it broke up, went all the way up to 125, and it filled that gap. Now, where did it fill the gap? At $84, right? $84 from 125. That's a 40-point move on $120 stock. It's a 30% move. Look how quickly it did it. These stocks can punish, right? They can punish. And I know everybody on the way up was like, this is the greatest stock ever. This is going to be the next Tesla, the next Apple, whatever. But, maybe there's problems in Washington and they're not going to get some contracts renewed. I don't know. But that gap got filled. And I pointed out there's another gap on the chart right there. Listen, you get the theme. The theme here is the markets are going down, or they're in a red condition, or there's more sellers than buyers. Whatever you want to look at, you should look at. And that means not just look at it, it means protecting yourself. I went to cash a couple of weeks ago on most of my positions. I still have some little play around positions that are much smaller now. I also went short, short to the downside on a couple of covered puts. And so we'll see how those go. Bottom line is, I think the probabilities are to the downside still, even though we're having a nice bounce today. And I'll leave you on that. I hope you have a fantastic weekend. And see you next time on next week's Market Pulse. Take care. Bye.